Good morning, students. Welcome back to the session on audit. Today we will continue our discussion on investigation. In the last session regarding investigation, we covered those areas or those provisions wherein the investigation is mandatory. And by mandatory, we mean to say that this is required by statute. We understood that this may be through an investigation officer, which would be appointed by the central government or which may be as per the directions of the tribunal, and which is again for various reasons, but largely it's in the public interest. And largely whenever any sort of transaction which is carried out, which is fraudulent in nature or which is not towards the interest of the company, only then we see such type of investigations taking place. And as regards this investigation, because the purpose is towards the public interest, and that's the reason why the extent of testing cannot really be defined. The extent of testing can be very, very significant in type in any sort of investigation. Now we plan to move on to other investigations, means those investigations wherein there is a specified purpose, and these are not arising due to any statute. These are arising due to a specific purpose, and these are very much voluntary in nature. So first of all, we will talk about investigation which is on behalf of an incoming partner. Now this is quite similar to what we discussed in case of a due diligence, though it's not exactly same. So there are few principles which we can draw from what we discussed in case of due diligence. So let's understand what is it that is required to be done when the investigation is done on behalf of incoming partner. So this is done on behalf of incoming partner. So let's suppose there's a partnership firm. There's a partnership firm, say A, B, C, and company. Let's suppose this is LLP. A, B, and C are the three partners in this, which has got A, which has got B, and which has got C. Now this firm is going to have one more partner, say D. So D is going to join this firm. He will be joining the firm. So he is the incoming partner. Now whenever new partner will come in, he will have his shares of liabilities towards the firm. He will have his shares of share of assets towards the firm. He will also be sharing into the profits and losses. So basically, he is going to be a partner of the firm. He is going to be the partner of this business. Everything which pertains to this firm, which has been earned by the firm in the past, be it any sort of liability or be it any sort of income. So whatever is there in the firm, that is going to be shared after this introduction of a partner by all the four partners instead of these three previous partners. So that's why the new partner will be again very much interested in knowing about a lot of things regarding this firm. What is the financial health of the firm? Whether the firm has got any hidden liabilities or not? What's the valuation of the firm? Because when the new partner will come in, he will also be paying some capital for getting introduced into the firm. If there are assets of the firm which are overvalued, what are those assets? Because that will again impact his overall contribution within the firm. Yeah. So there are a lot of factors which are important for this new partner to know. And again, if we look at those factors, those are important for existing partners also, because they will also be keen to know what are those factors which need to be discussed when partner D is joining the firm. Yeah, so this is something which will help both the parties, previous partners and the new partner. So let's understand some of the things which are required to be understood, which are required to be assessed by the new partner, and in a way, what should this investigation really cover by this new partner in respect of the existing firm in which he is getting introduced. First, he would want to know the history and how this firm has really grown over the years. He would want to know the provisions of the partnership deed, particularly for compensation of partners, their capital contribution, drawing rights, retirement benefits, job allocation, financial management, goodwill, anything which is related to this, he would be interested in knowing that. So the investigator or the person who will be appointed by this new partner will be covering all of these areas. Position of orders at hand and the range and quality of clientele should be thoroughly examined. So this is all about the business of the existing firm. Yeah, its operations means what are its operations, what is the clientele that it has got, what's the numbers at which it has been operating. Numbers means the turnover, the profits, etc. Position and terms of loan finance would call for careful scrutiny to assess its usefulness and implication for the overall financial position. The reason for its absence should be carefully studied. So in terms of any loan, etc., which may have been taken by the firm and which is already existing in the firm, that should again be carefully assessed and analyzed. Next will be about review or the study of the composition and the quality of key management personnel of the firm. So the KMPs means the senior persons who are employed in the firm and any likelihood of their leaving the organization in the near future. See, if you look at the KMPs, so KMP is a term which you generally get to hear in case of a company. But KMP basically means the senior employees of the firm. And any organization is significantly impacted by the quality of its senior employees, how good they are in terms of their working. And that's why it becomes the very basis for the smooth functioning of any organization. So that is again one area which the new partner would like to understand, means who are the KMPs, whether they are going to stay with the firm or not. Manner of computation of goodwill on admission as also on retirement. So what's the basis of computation of goodwill? When somebody will join in, when somebody will retire, all of these aspects should be ascertained. Whether any special clause exists in the partnership deed to allow admission in future of a new partner who may be specified on occasional terms. So what are the ways through which another partner can be introduced? What are the ways through which an existing partner may go out? So everything about the structuring which has been set up in the partnership deed would be of area of interest to the new partner. Correct? Other than this, it will be focused around the financial information of the firm, similar to what we saw in case of due diligence. In terms of financial information, what's been the profitability, what's been the turnover levels, and in terms of sustainability of the profits, if the firm is generating profits year on year, what's the sustainability of those profits, means the future projections. That is again very, very important area for a new partner to look into, because that will basically get into, or that will basically impact his valuation also. So this is another very important area for a new partner. And of course, when the new partner will be introducing the capital, So another area that he would like to focus on will be the valuation and the basis of computation of profit sharing ratio or the capital ratios, which is again dependent on the financial information of the partnership firm and his terms of reference with the existing partners. So these are some of the areas that he would like to focus on, or that he would like the investigator to cover. Though we have been calling this to be an investigation, this is not really an investigation of such a nature which we discussed in case of statutory investigation. This is, you can say, a slightly diluted form, diluted in the sense in terms of its extent, in terms of its checking, in terms of the matter which is under discussion. This is not a serious offense which has been going on, which is further investigated. This is something which is about assessment of information of the partnership firm so that the new partner is fully informed. Yeah, so whatever information he has been getting is accurate, and on the basis of this, on the basis of the information basis which he is going to take a decision, that information is absolutely all right. Okay, this was about investigation by a new partner in respect of a partnership firm. Another type of investigation will be the one which would be carried out for valuation of shares in private companies. Next. Investigation for valuation of shares. You may refer this on page number 16.40. Valuation of shares. As the name only suggests, this investigation is focused around the valuation of shares. This is all about getting into the valuation of shares. Valuation of shares means the valuation of the business, valuation of the company. And this is limited to the private companies. So that means in case of a private company, how should the valuation be really carried out? So we are not getting into the valuation mechanism. So that will also be important for us to understand. But we are focused towards the valuation by an investigator, means what are those areas which the investigator would be looking at when he will be getting into the investigation for valuation of shares. So let's understand. The importance in such a scenario should be given on various purposes for which such a valuation is necessary. The different bases on which valuation is possible, and the variety of economic factors on a consideration whereof the price so determined needs to be adjusted. The necessity for valuation of shares of a private company arises for under the Companies Act, a private company must restrict the transfer of its shares. Obviously, see, private company is generally a closely held company. Generally, you will see a private company to be closely held, and therein, anyways, there will not be a free flow of transfer of shares. Generally, it will be restricted. However, at times, for the introduction of a new shareholder, or maybe for an outgoing shareholder, the valuation may become important, because that will become the basis for the payout to the outgoing shareholder, or the payment to be received, or maybe say the consideration to be received by the existing shareholders from the new shareholder. So there could be various bases for the valuation of shares in a private company. There are certain bases which are considered in case of a private company for computation of valuation of shares. So let's understand those bases one by one. And we will also try to see as to what is this investigation going to focus on. First basis happens to be net worth basis. Net worth basis. Net worth basis means on the basis of the net worth, valuation will be computed. In this case, each asset should be revalued on taking into account its utility to the business as a going concern. The value of different assets on a revaluation may be either more or less in comparison to their book values. The value of the goodwill of a business is primarily dependent on its capacity to earn super profits and the period over which these are expected to arise. The super profits that the business would earn in the future are estimated on the basis of profits earned in the past. After making an allowance therein for the continuation or otherwise of favorable factors, which in the past had enabled the business to earn super profits. This is usually a difficult matter since for the purpose it is necessary to analyze the trend of economic, social and political forces which have an impact on the profitability of the business. Now, as regards the net worth basis or as regards the super profit method basis, what will be the consideration for the investigator? The net worth of the business. Because if you look at the net worth of the business, we are basically getting into the financial information of the company. So that's why all the areas which are related to the financial information will have to be reviewed by the investigator, will have to be investigated by the investigator. He will get into the financial information and he will get into the analysis of this net worth. Means what's been the basis of computation of net worth. There are various factors on the basis of which net worth will be computed, and of course those include assets and liabilities. Those include assets and liabilities. So in respect of assets, once again, all the factors like overvaluation of assets, undervaluation of liabilities, undervaluation of assets, overvaluation of liabilities, any of the hidden liabilities, any of the accounting policies which would have become the basis of accounting of this company and on the basis of which the book values can be seen in the financial statements will become very, very relevant. Here, another very important point will be around the computation of goodwill. Computation of goodwill will be another very important area in this case. Now, the basis of computation of goodwill could be through various methods. We understand for computation of goodwill, there are various methods. And one of the methods for computation of goodwill happens to be the super profits method, which conceptually captures the future profits of the organization, which basically captures the requirements related to the projections of the business. Means on the basis of the future profitability, on the basis of the projections of the company, its future profitability is ascertained, and it is ascertained as to whether the profits which will be generated in the future are sustainable or not. Means whether they will be growing in terms of the numbers as compared to current year or not. So what are the various bases for computation of profits? So all of these things would once again be analyzed by the investigator in this case. Okay, all of those areas will be analyzed by the investigator in this case. Clear? Next, another basis for the computation will be the yield basis. So let's understand about this method and what is required to be covered over here. See, broadly, if you have to see whether we talk about net worth basis, yield basis, everything eventually will come down to mostly the same points. Because for the basis of computation of valuation of business, a lot of factors are required to be considered. Irrespective of the method that will be chosen, the focus of the investigator will be on valuation. And it will generally not be limited to the only method which is considered. Okay, so what I'm trying to say here is that even if the yield basis method is considered, and which may be significantly different, let's suppose from net worth basis, still there are a lot of factors that the investigator should consider, even under yield basis, which he would have otherwise considered under net worth basis. Because for the investigator to get into the valuation of the business, all those factors are very, very important. Without getting into the details of all those factors, he would not be really able to get into the right perspective around the valuation of the business. Okay, so let's understand about yield basis now. The value of shares on yield basis is arrived at on the basis of present value of right to receive dividends in the future. Since the dividends can be paid only out of profits, in this case also, it is necessary to determine the amount of profits which the company would be earning in future, as well as the amounts thereof which would be distributed as dividend from year to year. In short, it's an exercise in projecting the trend to profits and predicting the policy that the company might follow in the manner of declaration of dividends. The rate at which amount of dividend should be capitalized is decided on taking into account the risk that the shareholders are taking in the matter of declaration of dividends being continued in future, assessed in the background of past history of the company, amount of reserves the company possesses, both secret and those disclosed in the books, future prospects of the line of manufacture or trade in which the company is engaged, and the impact of various social and political factors that are likely to emerge on the company's profitability. Since the effect of these factors is reflected in the prices at which the shares of companies engaged in similar trades and businesses are quoted on the stock exchange, the investigating accountant should consider them. So, in this case, in yield basis, what has been the underlying thing which the investigator should focus on? The profits. And for the profits, for the analysis of the profits, which will result in yields. Yields means the returns, the dividend payouts, etc., which are again dependent on the profits. So that means once again, we come down to the same thing for the assessment. And what is that same thing? Once again, we come down to the factor as to how the profits have been generated. What's been the basis of profits generation? What are the profits which are going to be generated in future? So that means once again, we are getting into the same thing, and that is about future projections. One thing that we'll have to understand is the fact that future projections in case of a valuation of business is the most important thing. This entire valuation premise happens to be the future projection. Yeah, so this is one area which cannot be avoided, and that's why we have discussed. And that's why, one thing which you have to remember at every point of time, be it due diligence, be it investigation on behalf of an incoming partner in a partnership firm, be it valuation of shares, which is required to be investigated, whether it is this method or this method. Irrespective of this, in most of the cases, you would have seen that our consideration has remained same. Yeah, our basis of assessment has remained same. Yes or no? Yeah. So the same thing will apply in this case also. Clear? All of you? Moving further on to the next type of investigation, which is on behalf of a bank or financial institution proposing to advance loan to a company. Bank or financial institution. Okay. And a company is looking for a loan or an advance. So we have a scenario wherein the company is looking for a loan from a bank or a financial institution. Yeah, company is looking for a loan or advance from a financial institution, and before advancing this amount, before giving this loan, an investigation would be carried out. Who would carry out this investigation? Bank or financial institution. Now, without even looking at any of the points, few things can be very easily assessed by you. And these are very, very generic actually. You can also think about all of these points on your own. That whenever any bank would be giving a loan to a company, what are those factors which the bank would like to check in respect of that company? Let's think about those items. First thing will be to understand whether this loan is long term or short term. Correct? Because depending on the term, the basis of assessment by the bank should change. When the loan will be for short term, what would the bank want to know about the company? Whether the company will have adequate liquidity in this short term to repay the loan. Correct? And if it's a long-term loan, then the bank would want to know whether the company will have adequate funds in the long term to repay the loan. Yeah. So basis the term of the loan or the advance, the assessment by the bank or the financial institution will change. Correct? So this is one. Secondly, as regards the factors which are required to be analyzed. So let's understand what are those various factors which the bank would want to analyze. What are those considerations which the bank would like to have in respect of giving a loan or advance to a company? First, the purpose for which loan is required and the manner in which borrower proposes to invest the amount of the loan. Means whether the loan is taken for construction of a plant, whether it is taken for construction of a building, or whether it is taken for expansion of the business. So what's been the basis? What's been the reason for taking this loan? How would this loan really be utilized? The schedule of repayment, particularly the assumptions made therein as regards amount of profits that will be earned in cash and the amount of cash that would be available for the repayment of loan to confirm that they are reasonable and valid in the circumstances of the case. Correct? Next, the financial standing and the reputation of the business, the integrity of the directors, The integrity of the management of the company. Again, very, very important factor. So this is one area that the bank would want the investigating accountant to check. Because if the reputation of the company is good, if the reputation of the KMPs, the directors or the senior officers of the company is good, so that reflects on the intent of the company or of those persons, because eventually the company is who? Company is driven by all the senior officers of the company. Correct? Company is all based on the senior officers. Correct? Next. Whether the company is authorized by memorandum or articles to borrow money for the purpose for which loan will be used. The history of growth and development of the company and its performance during the last 5 years. How the economic position of the company would be affected by economic, political, and social changes that are likely to take place during the period of the loan. Whether any loan application to any other bank or financial institution was made, and if so, whether it got rejected, and if it got rejected, what were the reasons? This is another very important factor, because let's suppose this company went out to another bank and its loan application was rejected. So this bank would be interested to know what were the reasons of the rejection. Means what was the problem because of which the other bank could not give the loan or the advance to this company. Another very important factor. Okay, yeah. Now, as regards this assessment to be done by the bank or required to be done by the bank, there are few things which the bank would want to know. So one is the liquidity. Second is the profitability. Third, we can say is the size of the assets, because that will act as a security to the bank. Size of the assets, its future profitability, its future projections, future profitability, and in terms of future projections, its future cash flows. It's not only about the profits, it's also about the cash flows, whether those will be generated in future or not. And there are various ratios which will help the bank or the investigating accountant to analyze all of these things. So some of the important ratios, you can also look at these ratios on page number 16.43. Sales to average inventories held means what's the portion of the sales out of the inventories in terms of its revolving cycle. Sales to fixed assets, equity to fixed assets, current assets to current liabilities, quick assets to quick liabilities, equity to long-term loans, sales to book debts, return on capital employed. So all of these things are important. All of these things are important to be checked. Yeah. Next, we can move on to some steps which would be involved in the verification of assets or liabilities, which would be included in the balance sheet of the borrower company. Now, as regards those steps, I don't think there is so much for us to get into, because most of the steps will be about verification of those items only. For example, if we talk about PPE, fixed assets, in respect of PPE, what are the things that will be checked? The underlying value at which the PPE has been recorded, any overvaluation which is possible, that means any impairment indicators and whether there is such impairment consideration or not, and if the impairment exists, whether that has been taken care of or not. Depreciation, whether the depreciation is computed using the reasonable useful lives or not. Correct? So it's all about checking the fixed assets. Similarly, there are various items in the balance sheet which will have to be analyzed. Some of the key items which we have already discussed in the past, that is about inventory, trade receivables, investments, existing secured or unsecured loans. Then any liabilities which could be related to the statute, means any of the statutory liabilities, any other liabilities, any of the contingent liabilities. All of these are very, very important for the consideration of the investigating accountant. So that means he will get into the books of accounts and perform procedures around the reasonableness of the amounts at which all of these items would have been recorded in the books of accounts. Correct? Yeah. But all of those procedures are largely same. So that's why I'm not getting into too much details of all of these procedures once again. Okay. Now we'll move into another investigation, and which is very important. Another investigation which is important, investigation of frauds. So let's understand about this type of investigation. What is this? What is required in this type of investigation? How would this really be helpful? Just 1 minute. Frauds. Frauds is something we all know. We have already had a discussion on frauds when we got into the auditing standards. Fraud is something which is a mistake, or you can say fraud is something which impacts anything in the financial statements or in terms of the financial information. But about the fraud, the differentiating factors happens to be the intention. Unlike any other thing, unlike any other error, fraud is something which is intentionally done. Correct? And that's why the impact of the fraud is generally very, very serious. If we look at the Companies Act, meaning of fraud has been considered in two specific sections. Section 143.10, where the assays, means the auditing standards specified by the ICAI, are deemed to be the auditing standards for the purposes of this act, which define fraud. And in section 447, where the punishment for the fraud has been prescribed. Fraud has been defined in para number 11A of SA 240, which we have already covered. Let's understand. It's an intentional act by one or more individuals amongst the management, those charged with governance, employees, or the third parties involving the use of deception to obtain an unjust or illegal advantage. So that's the meaning of the fraud. So so this is something which the essay defines. If we look at section 447 of the Companies Act, it defines fraud as a fraud in relation to affairs of a company or any body corporate, includes any act, omission, concealment of fact, abuse of position committed by a person or any other person with the connivance in any manner, with the intent to deceive, to gain undue advantage from, or to injure the interests of the company or its shareholders or its creditors or any other person, whether or not there is any wrongful gain or wrongful loss. Okay. So this is something which we understand about fraud. Now, as around the fraud, we can say that there are two types of frauds. And this is again something we have already discussed. So that's why I'll not be getting into too much details. One is the fraudulent financial reporting. So we are saying fraudulent financial reporting means the financial statements have not been prepared as per the applicable norms, or there is misappropriation of assets. For example, cash embezzlement, any assets which have been stolen. There are various types of frauds which will fall into all of these categories. Yeah, there are various types. All of those frauds are important for the understanding. One thing about the fraud is very, very clear, that fraud is something which is intentional, and therefore the person who will be committing the fraud, he would have some personal interest involved in that. Only then he will be involved in the fraud. Otherwise, he will not be involved in the fraud. Correct? Yeah. Only then he will be involved in the fraud. Otherwise, it will not be of any interest to that person. Yeah. Now, the frauds could be for personal gains, or the frauds could be the one which are there in case of various types of corporates. Frauds may also arise at operational level. So we'll understand about some of these frauds. Yeah, because on the basis of our understanding of various type of frauds, we'll get to know as to how these frauds may have been committed in the past, and therefore what should really be the focus areas on the part of the investigator in relation to any of these types of frauds. Some of the frauds which could be related to the corporates could be the one wherein advance billing is done. So what is this advance billing? We can say it's a situation where the company officials indulge in booking fictitious sales in anticipation of actual sales. So what have they done? They have booked the sales today itself. They have booked the sales today itself. And they are anticipating that actual sales will arise in the future. Though actual sales have not arisen, those will arise in the future. When those actual sales will arise in the future, at that point of time, adjustment of those actual sales will be done against the fictitious sales. But as of now, those fictitious sales stand as if those are the actual sales. Correct? Another type of fraud could be the one wherein shell or dummy company schemes are created. It represents a fictitious company or a paper company. And why is this established? to transfer profits or fund from the main company. This could involve fictitious bills, mostly for services rendered or consultancy charges. So let's understand. So there's a main company, A Limited. A Limited has been generating good profits. It's been generating good profits. Now, all the profits belong to whom? The company itself. Correct? So if we have to bring out the profits from the company, what's the way? One of the ways will be to show the expenses of the company. And how those expenses will be shown? Let's suppose a dummy company is created. Dummy company means company which doesn't have any business. It's a company which is created only for raising bills. Raising bills for various services. The service would not have been rendered at all. Yeah, service would not have been rendered. So by doing this, what will happen? This company will raise a bill to A Limited, and A Limited will transfer funds to this company. And with this, what will happen? The funds will get transferred to the dummy company. So the funds are actually moved from this company to this dummy company. Okay. Another type of fraud is the one which is related to money laundering activities. Very, very serious. As per the Prevention of Money Laundering Act 2002, whosoever directly or indirectly attempts to indulge or knowingly assists or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime and projecting it as untainted property shall be guilty of offense of money laundering. Money laundering simply means conversion of cash into the actual banking channel. Okay. Then there could be certain frauds which may be committed by the employees. So these are considered as frauds at operational level. Some of these frauds that we discussed, whether it was related to money laundering, whether it was related to dummy companies, advance billing. So these were the frauds which were actually committed by the management, or you can say by the company officials, by its owners. The very existence of the company was for the purposes of committing a fraud. But now we are not talking about frauds committed by a company. We are saying some of the frauds which may be committed by the employees of the company. So how can those employees commit a fraud? First, tempering of checks, wherein the name of the payee is altered. Preparation of checks without issue of checks to payee are some of the methods which are at times followed by the employees. Yeah, are some of the methods which are followed by the employees. Say for example, on a check, a name is written and that name is then changed. Yeah. Or for example, in some of the checks have not been issued, or the checks have been prepared but have not been issued and the funds are misutilized. Off-book frauds. So what are these off-book frauds? In this type of fraud, the fraud perpetrator misappropriates the cash before those are recorded in the books or before the sale is recorded in the books. So this is all about misappropriation of cash by the employees. Then there is cash embezzlement. Then there is another type of fraud which is called as fraudulent disbursements, which is again done by issuing or submission of false bills or personal expense bills being converted into official expense bills. Again, a very, very common type of fraud. So let's suppose company has a policy for reimbursement of expenses incurred for official purposes. Employee has incurred an expense not for official purpose, but for personal purpose. But the bills have been submitted. And when the bill is submitted, nowhere on the bill it will be specified whether it is personal or official, isn't it? Bill will not tell you for what purpose this expense was incurred, but the employee will claim the reimbursement, saying as if it was incurred by the employee for official purposes. So this is another type of fraud. Yeah. Payroll fraud, again a very, very common type of fraud, wherein the employees are paid even though they don't exist. So it's all about creating dummy employees. They only exist in the records of the company. Actually, they don't exist, but the payments are made to those employees. Commission schemes. In this case, the salesman will take advantage of some of the commission schemes. For example, let's suppose a company pays a commission, let's suppose at the rate 2% to the commission agents. It pays commission at the rate 2% to the commission agents. And this commission is paid to the commission agents when they will bring the sales to the company. And it's not necessary that sales to the company will be brought only by the commission agents. Some of the sales are also brought directly to the company. So let's suppose there are some direct customers. Now, what would the employees of the company do? They will show these direct sales as the one which are routed through the commission agents. Because of which, what will happen? Because of which commission will get paid to these commission agents, even though they have not brought any business. This is again a kind of fraud. Yeah, again a kind of fraud. Correct? Now let's get into the procedure for investigation of fraud. Because for us, what's the most important thing? The procedure for investigation of fraud. Before proceeding to investigate frauds of the type which have been discussed by us, the investigating accountant should ascertain the exact duties of the person who is suspected to have committed a fraud, his relationship to the general routine of the office, the circumstances in which any known instances or defalcation have come to the light. It's very, very important to understand about such employee, about that person, how that has been linked to the company, what all things he would have been doing in the past, basis which complete details can be ascertained around the fraud which would have been committed or suspected to have been committed. Such an inquiry would give a clue to promising avenues of investigation. Yeah. So basically, it's all about planning the investigation. Greater the authority of the individual suspected of a fraud, wider would be the field which would have to be covered by the investigation. Yeah. It's very, very important, because if the person who would have committed the fraud, he has got authority, he would have got authority, then he would have committed such fraud at a wider level. So that's why in all of these cases, it's very, very important. It's very, very important for the investigation officer to get a complete understanding about it. The complete perspective around him needs to be understood. Okay. So let's understand some of the situations in which money may be embezzled and the various forms that such frauds usually take place along with their investigation procedure. First is about the cash receipts. Very, very common and very much susceptible to fraud. The moment we say the cash is involved, the chances of committing a fraud cannot be denied or cannot be avoided. So very, very important. First, cash receipts. In cases like holding back cash sales, collections by traveling salesmen, VPP receipts or casual receipts, for example, sales of scrap, recoveries out of debts written off earlier, amounts of receipts embezzled may be subsequently covered up by the perpetrator. Adopting one or other of the undermentioned devices. Let's understand. Issuing a receipt to the payee for full amount collected and entering only a part amount on the counterfeit. Yes. Maybe an amount has been received from the debtor in full, but on the record it's been shown that the debtor has paid only 95%. So 5% has been recorded as not collected, and which may then be kept outstanding for a long period of time. Or maybe it's shown as if a discount has been offered. Maybe a cash sale is adjusted with a credit sale. So there are various mechanisms through which such fraud may be conducted in respect of cash receipts. So how should this verification be done? So let's understand the verification. On the assumption that some of these may have been diverted before being entered in the books, evidence as regards income received from different sources should be scrutinized. Example, inventory, sales summaries, rental registers, correspondence with customers, advices of traveling salesmen, counterfoils or receipts. All of these are very, very important to be scrutinized. Carbon copies of receipts which were marked duplicate should be scrutinized to confirm that they are in fact copies of the receipts issued earlier. Any paying slips from banks, the details of cash deposited on each day should be compared with those which are shown in the cash book. Maybe in the cash book it's shown as if the cash is deposited equivalent to rupees 1 lakh. But actually the paying slip shows cash deposit of 90,000. So there's a gap of rupees 10,000. Correct? Yeah. So all of these things are therefore important. The record of sales of scrap of waste paper. This needs to be analyzed because scrap is something for which the value cannot be clearly ascertained. And generally there would not really be a control in terms of the volume of the scrap that the company may have, the business may have. And some of the scrap may have been sold for which the records may not be appropriately there. So all of these things are again very, very important for the investigating officer to look into. Correct? Cash sales should be vouched in detail. See, though one of the things which is associated with most of the frauds which are of this nature is involvement of a cash. These days, most of the things are in any ways moving from cash to bank or cash to say digital mechanism. The moment we shift from cash to digital mechanism or to bank, most of these frauds can be easily cut down. But some of the businesses are really are really the one which work on the cash mechanism. So therein, all of these things cannot be really avoided, right? Another method through which cash frauds may be committed is the one wherein cash payments are inflated. So the payments have been made in cash, but those have been inflated. Let's see how. Making double payment of an invoice, or making payment of an invoice which does not exist. Paying personal expenses out of businesses by falsifying details. Showing betting losses as advertisement charges. Withdrawing unclaimed credit balances of customers or amounts falsely credited in the accounts of the parties. Falsely adjusting a refund in the account of a customer and withdrawing the credit balance. Wrong totaling of the wage sheets and misappropriating the excess amount withdrawn from the bank for payment of wages. Okay. So these are some of the ways through which cash payments can be inflated. So let's see how do we verify them. All the evidence as regards the cash payments which would have been made, including the acknowledgement by the parties for payments shown to have been made to them, should be carefully scrutinized. In case where a figure appears to have been erased or altered on the receipts issued by the party, on reference of the party concerned, the actual amount paid to him should be confirmed. The same procedure should be adopted in respect of amounts acknowledged on blank papers, if there are any. System of recording of wages should be reviewed, especially as regards possible over-totaling of wage sheets and entries in them of dummy workmen. The petty cash book should be vouched and totaled. Confirmation should be obtained from the partners or the directors in respect of amounts showed to them as payments. All the bills receivable or the payable should be checked by reference to the bills book. Yeah, another very, very important procedure. Moving on to another type, frauds through supplier's ledger. So let's understand about this. How can the fraud be committed through supplier's ledgers or in relation to the supplier's ledger? Adjusting fictitious or duplicate invoices as purchases in the accounts of suppliers and subsequently misappropriating the amounts when the payments are made to those suppliers in respect of these invoices. So duplicate invoices have been created or have been shown in respect of the expenses, in respect of receipt of goods. Those goods or services have not been availed. Goods have not been received. So these are all fictitious invoices which have been created. And then the payments are made in respect of these invoices. Suppressing the credit notes issued by suppliers and withdrawing the corresponding amounts not claimed by them. Okay, so these are some of the mechanisms through which such frauds are committed. So let's see how do we verify them. Verification of balances in the supplier's ledger. The board general should be vouched by reference to the entries in the goods inward book. So what's the way? Very simple. Whenever any good or service would have been received, for the goods, the company should have been maintaining a goods inward register. At the gate, entry, the guard or maybe the person who is responsible would make an entry for inward of those goods, through which it can be checked whether the goods were actually received or not, or whether it's a fake invoice. Similarly, if the services would have been received, then somebody in the company would have acknowledged those receipt of services. There must be a contract for those services being rendered. Correct? Now, in relation to such type of invoices, in relation to such type of services, it should be tracked through the other documents whether those goods or services were actually received or not. Okay. All the suppliers should be requested to furnish statement of their accounts to see whether or not any balance is outstanding. So let's suppose any supplier has been shown as if he has issued 2 invoices. So in the records of the company, it's been shown that the supplier has issued 2 invoices. Actually, the supplier has not issued 2 invoices. Okay. Now, in such a case, what do we do? In such a case, in relation to that supplier for which 2 invoices have been shown, when we obtain the balance confirmation from the supplier, we will get to know whether the supplier is showing the same record or not. Because if that is appearing in his balance confirmation also, in his account statement also, then it can be validated. Correct? So it's a third party check. Similarly, the frauds may also be committed through the customer's ledgers, wherein the fake sales may be shown to them. Correct? Maybe the collections would have been received from the customers, but that has not really been shown as a collection. So this can again be checked by getting into the third party confirmations, by obtaining the account balance statements of the customers. Some of the frauds could also be related to the inventory. Let's understand. Employees may simply remove the goods from the premises. So it's about stolen. Theft of goods may be concealed by writing them off as damaged. Maybe the goods were stolen, but it was not shown as theft of goods. Instead, those were shown as if they got damaged. Inventory records may be manipulated by the employees who have committed theft so that the book quantities tally with the actual quantities of inventories in hand. Correct? So let's understand some of the procedures which may be adopted in relation to verification of such type of frauds related to the inventory. It may be of trading stock, raw materials, manufacturing stores, tools, or of similar items capable of conversion into cash. The loss may be the result of a theft by an employee, either once or repeatedly over a long period, when the same have not been detected. Such thefts usually are possible through collusion. Generally, we will not see that only one person is committing such fraud. Generally, there will be a group of persons, many employees, generally a full department, generally a full team will come together and would have been committing such fraud. Therefore, for their detection, particularly when there's a collusion, it's very, very important to track the entire system. The entire system of receipts, storage, dispatch of all goods should be reviewed to localize the weakness in the system. Because now we are looking at a system which needs to be improved. Because when the employees have colluded, it reflects that the entire system of the organization has failed in terms of tracking all of these things. And that can only be tracked, that can only be improved, or such fraud can only be detected when this entire system is tracked and not only one of the activities. And that system needs to be tracked carefully. The detection of factors which have been responsible for the theft and the establishment of guilt would be difficult in the absence of system of inventory control, existence of detailed record of movement of inventory, availability of sufficient data from which such a record can be constructed. So we can say that if a proper system, and this system is all about having strong controls in the organization, those would be missing, then such a system would continue to commit frauds. It will be very, very difficult to keep a track on that on a continued basis. So that's why this entire system will have to be rehashed. This entire system will have to be improved. Only then such frauds will start getting detected. Otherwise, all of these frauds, even though they would be getting even though those would be conducted, it will be difficult to track them. Okay. So let's look at some of the indicators of fraud. There are several indications of possible frauds. One, that is about discrepancies in accounting records, including non-recording or partial recording, or incorrect recording or delayed recording of amounts, misclassifications, etc. Conflicting or missing evidence, including missing documents, altered documents, significant unexplained items in reconciliations, discrepancies between entities' records and confirmations received, unacceptable management responses such as denial of access to records, facilities, employees, undue time pressure to resolve complex issues, unusual delays in providing requested information, denial for use of computer-assisted audit techniques, unwillingness to address identified deficiencies in internal control. Yeah. Following accounting policies which are not in line with the industry standards, frequent changes in accounting estimates. So some of these things can only be improved when the systems are made stronger, when the internal controls are established, and the internal controls are also implemented. So this is something which we can also say as one of the mechanisms through which fraud can be prevented. But as around the detection of the fraud, in case of fraud, whenever it is conducted, and irrespective of the types of frauds that we would have discussed, fraud would not be easy to be detected. Even though it is suspected that a fraud exists, it will still not be easy for anyone to detect that. It's a very, very difficult task, and which may require investigating accountant to get into a lot of details. The horizon within which he will have to work may have to be increased significantly. So that's why it cannot really be limited in terms of various areas that he will be looking into. Only then the fraud can be appropriately detected. All right, clear? So this was all about discussion on the frauds and the types of frauds and the investigation around it. Now we will move on to the next type of investigation, which will be conducted on behalf of individual or firm proposing to buy a business. So we can say there's an individual or a firm. They are proposing to buy a business. I think this is the one that we have discussed quite a few times now. And that's why you will not really see a difference in terms of the approach. Whether it is about incoming partner, something we discussed, whether it is about due diligence that we discussed. In most of these cases, the perspective is going to be the same. And here again, because there's an individual or a firm which is planning to enter a business, which is planning to buy a business, that's why what is going to be their focus area? What is going to be their focus area? Can you tell me, all of you? In such a case, what's the most important aspect which will be required to be reviewed? It will be the future projections. Because that will drive the valuation. That will drive the valuation. Very, very important consideration. Okay, very, very important consideration on the part of the individual or the firm. So let's understand some of these things once again. In case of proprietary concerns or the partnership firms, reasons for the sale of business and the effect on turnover or profits that would be there on retirement of present partners or the proprietor needs to be considered. The length of lease in respect to premises of the business, prospect of its renewal or extension, unexpired period of any patents which may be owned by the vendors, the age of the present managerial staff and the prospects of continuity in service under the new proprietorship, and the possible liability not already provided for that would arise as regards the payment of pensions or gratuity in case of old and aged employees and those retrenched. If the bulk of sales are made to the customers whose number is small, the profitability of the business would be greatly shaken on withdrawing their support. The valuation that could be placed on goodwill to determine whether that appearing in the book is less or more. If you will see all of these points, they are all moving towards the future projections. They are all driven towards the future projections. So that's the focus area. If the business belongs to a limited company, then what will be the consideration factors? Capital of the company. If there is any uncalled liability on the shares, means the existing shares which have been uncalled. If the capital is divided into different classes of shares, the rights that are attached to each class, particulars of dividends paid in the past and amounts thereof which are in arrear. If there are any mortgages created on assets appearing in the company's books, a search should be made in the register of charges. Correct? Yeah. Next is the investigation in connection with review of profit or financial forecast. Once again, it's the same thing, because so far everywhere whenever we were discussing the investigation, we were focusing in fact mostly on the financial forecast, mostly on the profits. So let's see what are those areas that the investigator would look into in respect of all of these things. One, there are many investigations which involve an examination of future profits. Profit reports can be required as part of general investigation into the purchase of a business or by banks and financial institutions with regard to cash flow and the profitability statement for appraisal of loan submissions. All forecasts depend to a large extent on the nature of the business with its numerous and substantial uncertainties. Therefore, such forecasts are not capable of verification by the reporting accountants in the same way as financial statements which present the results of completed accounting report. Now, as regards the future projections, there's a change in approach. When it comes to the financial statements, we are basically talking about an accounting period which is completed. So it's the historical information which is presented, for which records and information are available or should be available. So the basis of this financial statement or the financial information which is moving into the financial statements is very much available, is very easy to be tracked. But as regards the future projections, the very basis for ascertainment of the profits which will be generated, the cash flows which will be generated, the revenues which will be generated, the expenses that would be incurred in the future. It's not something which is easy to track. This requires a lot of understanding of the business, a lot of understanding of the industry. Yeah, careful analysis of how the growth in the industry is impacted. What are the government policies which may impact the profitability or the business or the operations? What are the technological changes? A lot of such factors are required to be analyzed. Okay, so this is all about future information. So we can understand the approach in these two cases are significantly different. Therefore, forecasts are not capable of verification by the reporting accountants in the same way which will be followed for historical financial information. Okay, clear on this? So this was all about investigations, the types of investigations, various procedures which are involved in this investigations. And with this, we come to an end to our discussion on investigation. We will now move on to the next topic, and that is about forensic audit. And before I move on to the forensic audit, if you have any questions, you may let me know. Any questions, any doubts which you may have, you may let me know. Okay, so moving on to the next topic now, forensic audit. Forensic audit, we can say, is an upcoming area or is an upcoming field. The usage of forensic audit has significantly increased in the last few years. And that's why you can also consider this to be a very, very important thing for the purposes of any of the career streams to be followed. A very, very important thing. See, forensic audit is all about, once again, tracking some of the things which are associated with fraud. And with the fraudulent activities that have increased, the fraudulent activities that are getting conducted, the requirement of some mechanisms, the requirement of some type of verification which can help resolve or which can help in terms of detection of some of those frauds is addressed through another type of verification, or you can say is addressed through this forensic audit. So what is this forensic? Let's understand the meaning of forensic audit. Forensic means suitable for use in the court of law. Suitable for use in the court of law. So that means it's all about creating an evidence which can later on be proved or used in the court of law for proving that the fraud would have been conducted. Okay. Now this fraud is one of the areas which is tracked through this. So we can say it's once again a tool. It's once again a tool which is used for the purposes of tracking some of these activities which are in the nature of fraud. What we will now do is we will try to understand about the difference between the statutory audit that was in relation to the financial statements vis-a-vis forensic audit, and we'll try to understand the extent of this. When it comes to the audit, the statutory audit, we understood that was all about expressing a true and fair view, and it's a routine thing. As compared to this, forensic audit is not a routine thing. It's not something which is mandated by statute. It's something which would take place, or this is something which would be required when the fraud would have taken place in the books of accounts. When we see fraud has taken place in the books of accounts, that is the time when the forensic audit is required to be conducted, required to be performed. And therefore, you would now be able to easily appreciate this point that the extent of testing, in case of forensic audit, would again be very, very extensive. This would again be something which will be investigative in terms of its approach. The testing, the extent will be an in-depth, will be to a great extent as compared to what we do in case of a statutory audit, which is generally limited to only a sample test, and that too something which focuses on the routine thing, something which focuses on the prima facie evidence. Means through the audit procedure, if something is coming to the knowledge of auditor, that is okay. Auditor will not try to get into anything. Auditor is not there to detect anything. Correct? Now, because forensic audit is something which focuses on the fraud, that's why unlike statutory audit, it cannot be really be bound in terms of any particular financial year. Because when it comes to a fraud, the forensic auditor may have to go into so much details, may have to go back to the last year's data, the last 2 years data, last 3 years data, because you never know when this fraud started taking place. Maybe it's getting suspected today, but the fraudulent event might have started 5 years back. And fraud is not something which will get detected easily. Fraud is again not something which will get suspected easily. It will take time for the fraud to be detected. Yeah, and that's why fraud will have its origin of a time period which is generally a significant time period as compared to what we see in case of any other normal activity. Now, in relation to fraud, because the fraud is not something which will only arise from the books of accounts, or it may be arising through reasons which are not limited to the books of accounts. That's why, unlike statutory audit, forensic audit will not be limited to the books of accounts. It will have its basis as books of accounts. It may be the starting point for the forensic auditor to get into the books of accounts. But some of the things which are not really going into the books of accounts will also be reviewed by the forensic auditor. And even if we look at the books of accounts, the very propriety element of the transactions will also be reviewed by the forensic auditor. Means whether the transaction should have taken place or not. Because when it comes to the statutory audit, if the transaction has taken place and has got supporting documents, then the auditor is okay with this. But forensic auditor would need to challenge the very occurrence of that transaction. Why there was a need for occurrence of that transaction, why there was a need of getting into such type of transaction is something that you would like to focus on. Correct? Clear in terms of the approach of the forensic auditor as compared to the statutory auditor? Yeah. Okay. So now what we can do is we can take a break, and after the break we will continue with our discussion in relation to the forensic audit. So we'll get into some more details around the forensic audit. Yeah. In the meantime, if you have any questions, any doubts, you may let me know. And after the break, we will get into further details of the forensic audit. So let's take a break now. Yeah. यार आप जवाब नहीं देते हो यार. Are we live? Jay? Jay? Hi, welcome back. So we can now continue with our discussion on forensic audit. As regards to forensic audit, let's understand some things into which forensic auditor will be involved in. First, that is about the fraud detection, because that's the basis of this forensic auditor will that he needs to get involved into. So the fraud detection is the one area that he will be focusing on. So let's understand what is it that he will try to do in case of fraud detection. Investigating and analyzing financial evidence, detecting financial frauds, and tracing any misappropriated funds. So once again, because the focus in case of forensic audit happens to be the fraud, so that's why we can see two types of frauds getting committed. One which could be related to fraudulent financial reporting, or the other one which could be related to the misappropriation of assets. In relation to both the types, the forensic auditor will be getting into the investigation or analysis of all of these situations around the detection of such type of events. Next, that is about computer forensics. Now, as around the computer forensics, it will be related to developing the computerized applications to assist in the recovery, analysis, and presentation of financial evidence. many a times what we can see is that some of the audit trails may be erased. Audit trails means some of the evidences in relation to the events that would have taken place that may have been erased, because of which the detection of fraud may become difficult. And that's why another thing which the forensic auditor will be involved is about the usage of information technology, is about the usage of those systems through which that financial evidence or that trail which would have been erased can be retrieved, or which can then be tracked to get into such type of fraud which has been committed. Next is about the fraud prevention. So one thing for sure is about the fraud detection, which is important, but at the same time, prevention of fraud is important. As around the prevention of fraud, it's basically, you can say, the first step which he will need to get into, because fraud can be detected only when the fraud is committed. But the situation should be created in such a manner, or the ideal environment should be such that the fraud gets prevented from being committed. And that's another area for which forensic auditor may also be involved, may also be hired. So either he will be reviewing the internal controls, because that's again the very basis of prevention of the frauds, because if the organization will have strong internal controls which are operating effectively, then any of the reasons or any of the chances of the frauds taking place can accordingly be minimized. So therefore, he will either be involved in the review of the internal controls to verify their adequacy, or providing consultation in the development and implementation of internal control framework aligned to organizational risk profile. Next will be about providing expert testimony. Now, he may also be involved in assisting the legal proceedings. This is another very important area in relation to the frauds which are getting detected, and that is something which comes from the forensic audit. Forensic, if you remember, we understood the term. Forensic means something which can be proved in the court of law, or which can be used for proving a fraud in the court of law. So that's why forensic auditors, they are also required for providing the expert testimony, which can then be used in the court of law. So they will be involved in assisting the legal proceedings, including testifying in court as an expert witness, because of the activities they would have conducted, because of various tasks they would have performed in relation to the fraud. And preparing visual aids to support the trial evidence. That's another very important area, as we have seen. Now, who would be requiring these forensic auditors? Considering all of these activities in which they may be involved, they may be required by the laws, they may be required by the police forces, they may be required by the insurance companies, because as around the insurance claims, whether insurance claims are right to be claimed or not, all of these things are important. Court of law, because of the expert testimony, etc., which they provide, because of the role they play, again, very, very important. Because of the business community, for various activities in relation to the fraud detection as well as prevention. And this business community will not be limited to any of the known financial community, that will also involve financial institutions like banks, and of course by the government and various regulatory agencies. Now, what's the importance of the forensic auditors? As we have discussed, forensic auditors by their very basis are involved in the detection of the fraud, prevention of the fraud. So these things are very, very important, considering that today's business economic environment and considering the dynamism which is involved in today's business environment. And that's why the importance of forensic auditors has only increased. Now let's understand some of the services which may be rendered by the forensic auditors. Let's see what are those services which they render. First, crafting questions to be posed, responding to the questions which have been posed, identifying documents to be requested, identifying individuals to be the most knowledgeable of the facts, conducting research relevant to the facts of the case, identifying and preserving key evidence, evaluating produced documentation and information for completeness, analyzing produced records and other information for facts, identifying alternative means to obtain key facts and information, providing questions for deposition and cross-examination of fact and expert witnesses. So all of these activities that you see are being rendered by the forensic auditor are all driven towards the process towards detection of the fraud. So some of these activities which you can see are only a small ingredient of the complete process. So this complete process may involve detection of the fraud, for which the personnel may have to be identified, the questions may have to be drafted, which need to be asked from various individuals. So it's not about getting into the complete process always. Maybe for only a part of the process, forensic auditor may be involved. Yeah. So that's why their importance is significant. The services which are rendered by forensic auditors, accountants are in great demand. And let's see what are those areas where they are in great demand. As I've told you that these services are very much in demand these days, and this is an upcoming field for the professionals like all of us. First, criminal investigation. Matters related to financial implications. The services of the forensic accountants are available. The report of the forensic accountant is considered in preparing and presenting as evidence. Professional negligence cases are taken up by forensic accountants. Non-conformation to generally accepted accounting standards or non-compliance to auditing practices or ethical codes of any profession, they are needed to measure the loss due to such professional negligence or shortage in services. Forensic accountants also provide arbitration services for the business community. Their expertise in the data collection and the evidence presentation makes them sought after in these specialized practice areas. They are also involved in fraud investigation and risk or control review, something we have already discussed. Settlement of insurance claims. Once again, they are playing a role in terms of settlement of insurance claims because of the insurance companies who may hire them as regards the claims to be verified, because some of the claims may not be the right claims which may be claimed by the policy holders. So they also verify the claims. They also verify the sanctity of the claims. They also verify whether the claims which would have been processed or which are getting processed are in line with the terms of the policy document or not. They are also involved. Forensic auditors are also involved in the dispute settlement. For example, business firms engage them to handle disputes related to various contracts, construction claims, product liability claims, infringement of patents or trademarks. So any of the disputes related to various contracts, those are settled by having forensic auditors as the intermediaries, because of the expertise which they will have, because of the expertise with which they can handle all of these areas. So let's now get into the detailed process which will be followed by the forensic accountant. Let's understand some of the steps which will be involved in this process. First will be the initialization. So we can say the first step, the initialization or the activation of this entire process. So what is required in this? It is vital to clarify and remove all doubts as to the real motive, purpose, and utility of the assignment. It is helpful to meet the client to obtain an understanding of the important facts, players, and issues at hand. A conflict check should be carried out as soon as relevant parties are established. It is often useful to carry out preliminary investigation prior to the development of a detailed plan of action. This will allow subsequent planning to be based upon a more complete understanding of the issues. Next, on the basis of this activation or this initialization, which is just the beginning, a plan is required to be developed. So the next stage the next step in this process of the forensic audit will be development of a plan. In this case, the plan which will be developed will take into account the knowledge which is gained by meeting with the client and carrying out initial investigation, and will set out the objectives to be achieved and the methodology to be utilized to accomplish them. Next, and one of the most important activity or the step in the forensic audit, and that is about obtaining the relevant evidence. Depending on the nature of the case, this may involve locating documents, economic information, any other information, any other expert, or the proof of occurrence of an event, the type of fraud which may have been detected in terms of its understanding and how that fraud may have been committed. The evidence should be sufficient to ultimately prove the identity of the fraudster, the mechanics of the fraud, the amount of financial loss which would have been suffered. It is important that the investigating team is skilled in collecting evidence that can be used in a court of law and in keeping a clear chain of custody until the evidence is presented in the court of law. If any evidence is inconclusive or there are gaps in the chain of custody, then the evidence may be challenged in the court or may even become inadmissible. So that's why obtaining the evidence or setting up this evidence which may be proved in the court of law is the most important aspect which is involved in the forensic audit. Investigators must be alert to the documents which are getting finalized, which are damaged, or which are destroyed by the suspect, because any of such events may take place. So that's why it's very, very important on the part of the forensic auditor to establish the evidence and to make sure that that evidence should be admissible in the court of law. Next, now once the evidence has been obtained, once the evidence has been established, then comes the analysis. Now this will be the actual analysis which will be performed by the forensic auditor and which will depend upon the nature of the assignment he will be involved in and which may involve various activities. Let's understand. First, summarizing a large number of transactions, performing a tracing of assets, performing present value calculations, utilizing appropriate discount rates, performing a regression or sensitivity analysis, utilizing charts and graphics to explain the analysis, using a computerized application such as spreadsheet, database, or computer model. Yeah, so all of these things can be used by the forensic auditor for the analysis of the information, for the analysis of the data, or for the analysis of this evidence that could have gathered. Basis which this entire activity of forensic audit can be completed. Next is about the reporting. Now, after the task is completed, another very important area will be the report. Now, unlike any other verification, forensic auditor will also be required to submit a report, issue a report. And this is not something which is in the nature of expressing an opinion like we discussed when we compared this with statutory audit. This is all about which is focused towards a specific objective, and that is about fraud detection. Issuing a final report is the final step towards the audit, which is in the nature of forensic audit. Auditors will include information detailing the fraudulent activity which has been found. So one thing which will get covered over here will be the fraudulent activity. So this is the first thing they will do, fraudulent activity. The client will expect a report containing the findings of the investigation, including a summary of evidence and conclusion of loss suffered. So next will be the evidence, because without evidence it cannot be proved, and the loss which would have been suffered. So the report should cover all of these aspects. The report may include the sections on the nature of assignment, scope of investigation, approach which was used, limitations if there were any. So that is all about the scope. That will also be detailed out in the report. So this is something which is the outcome, and this is something which is the scope. So the report should also cover the scope. The report will also discuss how the fraudster set up the fraud scheme and which controls, if any, were circumvented. It is also likely that the investigative team will recommend improvements to controls within the organization to prevent any similar frauds occurring in the future. Next, after this report is submitted, the next step will be the court proceedings, because the entire objective of this fraud, of this forensic audit, will be to gather evidence which can then be proved in the court of law. Because this investigation is likely to lead to the legal proceedings against the suspect, because the suspect who would have committed the fraud, some legal proceedings will have to take place against him, and the members of the investigative team will probably be involved in the resultant court case. The evidence which is gathered during the investigation will need to be presented in the court. So this is the evidence which will be presented in the court of law. And this may also be called upon by the court of law, wherein the court of law would want to understand about this evidence in detail, as to what all evidence would have been gathered, how this fraud would have been conducted, and how the suspect was identified. Yeah, because all of these details will be important for the court to then finalize everything as around the legal proceeding which would be going on. Okay, so this is broadly about the forensic audit in terms of various steps which are involved. Now, considering the fact that it's a very, very critical activity which is required to be performed by the forensic auditor, and these days, because of the dynamics which have increased, because of the technology which is getting involved in terms of the businesses, in terms of various activities that are involved, that's why the forensic auditor also requires usage of certain techniques, and which are largely based on information technology or IT systems. So let's understand some of the techniques which the forensic auditor would want to use. First, that is about general audit techniques, wherein he will be testing the defenses. A good initial forensic audit technique is to attempt to circumvent those defenses yourself. The weaknesses you find within the organization controls will most probably guide you down the C path taken by the suspected perpetrators. This technique requires you to attempt to put yourself in the shoes and think like you are the suspect. So basically, it's about getting into that situation and assuming that as if you are the suspect, then how you would have committed the fraud, through which an understanding can be obtained that if I would be the suspect, this is how I would commit the fraud, so that the trail can be established, so that the path can be seen as to how the suspect would have committed the fraud, and that will become the first step towards moving into the direction of detection of fraud or identification of the suspect. Next, some of the statistical and mathematical techniques are also used. For example, ratio analysis. Some of the financial ratios are analyzed. Some of the financial ratios data analysis is done, and trend analysis is observed. Trend analysis means how the business would have behaved in terms of its numbers, if there are any specific events which have been impacting the organization. Is there any particular period over which a particular type of expenditure is incurred? Okay, so if there are everything in the normal course of business, or there were certain unusual things, so all of these things will be known through the trend analysis. Then there are certain techniques which are technology based. We understand that there is no transaction which will not leave a digital footprint in today's computer driven environment. Digital footprint is something which will always occur. Always. Close scrutiny of relevant emails, accounting records, phone logs, and target hard drives is a requisite facet of any modern forensic audit. Before taking steps such as obtaining data from email, forensic auditor should take appropriate legal advice so that it doesn't amount to invasion of privacy. Because he will be getting into all of this data, he will be getting into all of these systems which may have some privacy laws attached to them. So that's why, as the first step, he may want or he may require the approvals to access that. But this is something which will form an important part of his process. Because all of these digital footprints, all of these audit trails will be very, very important for him to track. Now, some of the forensic tools which are now available in respect of these activities could be a very simple thing of deleted files. A log of deleted files can be tracked by live analysis, NCase, MD5, tracking log files, PC system log, free log tools. All of these are the tools which are available in the current technological environment which the forensic auditor can use for the purposes of getting into all of these analysis. Computer assisted auditing techniques. Computer assisted auditing techniques means the usage of data for the purposes of conducting the audit. So this is all about certain tools, certain programs which the forensic auditors can use, which are based on information technology for the purposes of conducting various procedures. And some of the CATs, that means this computer assisted auditing techniques, are also used by the statutory auditors these days. So some of those tools and some of the other tools are also used by the forensic auditors. Then there could be generalized audit software. Some of the audit softwares which are available these days, for example, IDEA, for example, audit command language. These are some of the very common audit tools which are being used. And when we talk about these audit tools, we are not really limited to those audit tools in the context of a forensic auditor. They also move down to the statutory auditors. Statutory auditors are also using these type of tools quite a lot. So same are the tools, but in terms of their extent of testing, in terms of their usage, in terms of the application of these tools, those can play a very, very important role, right? So these are again very important area for the forensic auditor to apply, to use in relation to his forensic audit. Yeah. Similarly, there could be certain common software tool, like for example, CSTs, usage of Microsoft Office, RDBMS like MS Access. Yeah, again, these are very, very simple tools to be used, but very significantly used in terms of analysis of different types of data. Data mining techniques. Data mining means all about doing an in-depth analysis of data. See, data is something which will reflect a lot of things which may have been manipulated, which may have become subject to the fraud. So all of those data mining techniques will have to be applied by the auditor, which is into forensic audit. And for this, again, there are separate tools which are available. Yeah. Then there are some more techniques which are available to the forensic auditor. For example, computer forensics, hard disk imaging, email analysis, search for erased files, analyze use and possible misuse. Then the chain of custody, fingerprint analysis, forgeries, document dating, ink sampling. All of these things are available to the forensic auditor in relation to the data which is gathered, in relation to the evidence which is required to be created. Okay. Moving on to the next part, and that is about audit report. Audit report means the report which will be issued by the forensic auditor. Now, as regards this forensic audit report, once again, we will not really say that there is any format which is specified for this, because this is not really a statutory audit, and for which there is no format which is prescribed. It's similar to what we discussed in case of due diligence. It's similar to what we discussed in case of investigation. That any such report should bring out, first of all, the scope, some of the requirements which will be generated through the scope. For example, the activity, the evidence, the loss which would have taken place to the individual or the company, and any such report will always start with an executive summary. Executive summary, you remember we discussed in case of due diligence. See, all of these are advisory work. These are not attestation engagements. These are all of these engagements which are advisory in nature. And that's why for all of these things, it's very, very important to have an executive summary in place. So that somebody who is looking at all of these things, somebody who is getting into the analysis of all of these things, can first of all take an overview of what lies in the report in detail. Yeah, everything around it can be just taken up through a glimpse of this executive summary, because executive summary will give an overall picture of what all is forming part of the report. But there are few things which have to be kept in mind while drafting this report. First, this report should be simple and easy to understand. There should be a clear thinking in the report. To whom the report is drafted, purpose and the aim, cool and calm thinking to have logical and coherent presentation, pattern of presentation. Keep the reader uppermost in mind, because it's for the readers only. If there are any technical matters, see, if we look around the technical matters, they may be very, very easy for the forensic auditor to understand, but they may be very difficult for the layman to understand. So that's why the report should be drafted in a simple manner which a layman can understand, or the perspective should be such that the layman should be able to understand that. It should also be well presented so that the reader can understand it. It should be unbiased. It's very, very important. It should be focused from the perspective of the auditee, because it's towards the auditee. So that has to be unbiased. Impact of the report. Whatever be the probable reaction to the reporting, whether the action or decision will follow in quickest possible time or will be treated as of the academic interest only, is something which the forensic auditor will need to understand. He should not jump onto the conclusions simply. He should just first of all explain the context, get onto the analysis, and then jump onto the conclusions. Because without the explanation of the facts and the analysis, if he jumps onto the conclusions without bringing out all of these details, then the reader may not be able to appreciate some of the conclusions which may be given. And the facts and figures should be given in a proper sequence, which become easy for the user to understand. And it's all about presenting the document in a nice manner. Some of the factors which should be considered for various ways of presentation of written reports could be related to the nature of organization, nature of the subject for whom the report is intended, the purpose for which a report is prepared, management attitude, directives and the needs, forensic auditor's approach and the caliber, extent of details required by the auditee and the management. All of these aspects are important for the report to address. Okay, yeah. Now, as regards this report, if you have to summarize, it should start with an executive summary. Then it should also talk about the scope, which would cover the activities which would be performed, the activities which were required to be captured, the evidence which was required to be gathered, if there were any scope limitations. And then, of course, the context will start. Context will be all about the reporting in terms of the frauds which would have been taking place, the activity, the suspect, the evidence, and the loss which has been suffered by the auditee in such a case. Yeah, so with this, we come to an end to our discussion on forensic audit. And before I move on to the next topic, if you have any questions, we can have a discussion around that. Any questions, any doubts in case you have, we can have a discussion around that first of all. Okay, Sumit is asking, if a person commits a cyber fraud in a bank account, then the forensic audit is required. Of course, forensic audit may help in such a situation. And we cannot say that this will become mandatory in such a case. This would definitely help over there. And it depends on the auditee, whether the auditee wants to engage the forensic auditor in such a case, or he has some other mechanism in respect of such type of fraud. All right. Okay, any other questions, doubts? Okay, so I'll move on to the next topic then. Okay, so we'll now move on to the next topic, and that is about peer review. So let's understand, what do we mean by peer review? The term peer review comprises of two words, peer and review. So what do we mean by peer? Peer means a person of similar standing. Person of similar standing means our peers. So this is a term which we use in the normal context, our peers. Our peers will be like, say for example, if you are currently preparing for your exams, all of your friends who are preparing for the exams, they are nothing but your peers. If we are working in an organization and within a particular role or the structure of the organization, all of the employees will be considered as peers. So this is called as a peer group, a person of a similar standing, of the same level. Second is about the review. Now, what do you mean by review? Review is something which we have already understood. Yeah, which we have already understood. But let's understand the meaning of review once again. What do you mean by this type of review? The review means conduct of re-examination or retrospective evaluation of the subject matter. In general, for a professional, the term peer review would mean review of the work done by a professional by another professional of same standing. Okay, so let's understand this peer review now. What do we mean by this? Say, for example, there are two firms of chartered accountants. So there is a firm ABC and Company LLP, and there is another firm PQR and Company LLP. Both are the firms of chartered accountants, and both the firms are into practicing various areas. They are doing statutory audit, they are doing accounting work, they are doing taxation advices. Yeah, so they've got mixed bag of services in relation to various clienteles that they have. Okay, now what do you mean by peer review in such a scenario? Peer review means if this firm would have audited certain companies. Let's suppose this firm has done statutory audit. Okay, let's suppose this firm has done statutory audit of RR Limited. It's a listed company. See, this has done statutory audit of PP Limited, which is again a listed company. Let's suppose it has also done statutory audit of QM Limited, which is once again a listed company. Okay. Now, as regards the audit of these companies, two persons were involved, or you can say two entities were involved. When it came to the audit of RR Limited, so RR Limited would have been involved and ABC and Company LLP would have been involved. So these two parties would have been involved in that audit process. And this audit was the audit of the client. Who is the client? RR Limited is the client by ABC and Company LLP. And this is something which we have understood so far. So far in all of the auditing standards, in all of various types of activities that we have discussed, we used to discuss that an audit or a verification or an examination or investigation or whatever be the type of verification was done, that was done by a professional firm in relation to a client. But now, in case of a peer review, we are not talking about this client anymore. No, this client will definitely be subject matter. But now we are saying that the work which this firm would have done, and the work is towards the professional practice, that will become subject to review by another practicing firm. So that means PQR and Company LLP would verify whether the work, that means whether the statutory audit which has been performed by ABC and Company LLP in respect of any of them was as per the applicable reporting standards or not. So now it's a review by a firm of another firm. And this review of PQR and company, this review by PQR and company in relation to ABC and company LLP will not be on the financial information of ABC and company LLP. No. So we are not saying that the financial information of ABC will be audited. No, it's not an audit. It's an audit of audit, you can say. Whatever audit this firm would have done, whether this firm has applied all the relevant auditing standards, whether this firm has applied all the relevant accounting standards. Yeah. So this is something which will be reviewed by another firm. So this will be that another firm which will review the work which is performed by this firm. This is what we call as peer review. Okay. Now let's try to think about peer review. So why would a peer review be conducted? What will be the reason for conduct of a peer review? One thing which can be very easily made out of this will be to ensure the quality. If let's suppose ABC has not been maintaining the quality standards. Why? Because they have been auditing, but the quality with which the audit should be performed, and by the quality means the application of all auditing standards, assessment of all the accounting standards or any of the legal or regulatory requirements in relation to the audit. If let's suppose that is not taken care of by ABC, so then what is happening? In such a case, we can say the audit quality is getting hampered. And who is doing that? This firm is doing that. And this can be tracked by this firm. So if this firm will get into the peer review, then what will happen? They will be able to track the audit quality. They will be able to check whether the quality of audit in relation to the audit which was performed on any of these companies by ABC was appropriate or not. Okay, yeah. So this is one of the ways to improve upon the quality of the audit. So let's quickly understand what do we mean by peer review now. What do we mean by peer review? Peer review therefore means an examination and review of the systems and procedures to determine whether they have been put in place by the practice unit. Who is the practice unit? This is the practice unit. For ensuring the quality of assurance services. Assurance services means audit as envisaged and implied or mandated by the technical standards, ethical standards, professional standards, and whether these were effective or not during the period under review, and whether the same were consistently applied during the period under review or not. Okay, clear? Now, who will be a reviewer in this case? Reviewer would be a member duly approved and empaneled by the peer review board. Now, for this activity, who is the relevant authority? Who will be the relevant authority? It will be ICAI. It will be ICAI. And ICAI will have a board which is called as peer review board, which will get this done in relation to various types of audit. Okay. Now, peer review board will not be doing this review. Peer review board will get various practicing units various CA firms empaneled with itself, who will then support the peer review board in carrying out this task. Okay, clear? So it's the responsibility of whom? Peer review board. Who has the authority over this peer review board? Which is a body, or you can say which is a board of the ICAI, which is a part of the ICAI. And in terms of the practicing unit which will be doing this, that needs to be empaneled with the peer review board. Now, there are few terms that we are going to discuss very frequently. One is the peer review board. Second is this firm. This firm we will now start calling as reviewer. It will be reviewer or peer reviewer. Any of the terms we may assign to this. And this firm is a practicing unit. Okay, this firm is also a practicing unit, but we'll not call this as practicing unit. We will call this firm as the practice unit for the purposes of our discussion. Yeah, because this firm is subject to review by this reviewer. So that's why we'll call it as reviewer instead of practice unit. Yeah. Quickly understanding about the peer review board. Peer review board, we can say, is the board which is constituted by the council of the ICAI. And the expression peer review board is something which is referred to as board during the course of our discussion as we'll move. Peer review board was established in March 2002, and the statement of peer review has been revised in April 2020. The statement on peer review shall be deemed to be a guideline of the council of the ICAI, under which it is obligatory for the practicing unit to comply with the provisions which are contained in that statement. Statement means the mechanism which is required to be followed by this practice unit in relation to any of the attestation work they will be doing. Okay. Now let's move on to the objectives of the peer review. So what is the objective of the peer review? Very simple, to ensure that the quality is there in case of attestation engagements, in case of assurance services. And how can that be established? By a practicing unit following the technical standards, ethical standards, any of the professional standards which are applicable to such engagement. And in relation to any of the engagement, by having in place proper systems, including the documentation thereof, to amply demonstrate the quality of the assurance services. So we'll now move on to the scope of the peer review. Let's understand the scope of the peer review. So what would this peer review cover? First, peer review will cover compliance with technical, professional, and ethical standards. You can all refer this over here. Yes, all of these points you can just check. One, what is it that the peer reviewer will cover? The reviewer shall cover compliance with technical, professional, and ethical standards. One, first and foremost, quality of reporting means the final reporting which would have gone out in terms of its quality, whether once again it was in line with the reporting standards or not. Systems and procedures for carrying out assurance services means the entire process which would have been followed by this practice unit in terms of conducting the audit. Training program for staff, including the articled and the audit assistants who were involved in the assurance functions, including availability of appropriate infrastructure. See, one thing is for sure, that audit is something which is a teamwork, or you can say a work to be done by the people of the organization. And which organization is this? Practice unit. So it's very important that those persons who are employed by the practice unit are trained to carry out various tasks in relation to that assurance service. If those would not be trained, then it would be very, very difficult to ensure that the quality is there in case of audit. Yeah, so this is again a very important consideration on the part of the reviewer to check as to what all training programs that were conducted in relation to the practicing firm. Compliance with directions, guidelines issued by the council to the members, including fees to be charged, number of audits undertaken, register for assurance engagements conducted during the year, and such related records. Next, compliance with directions and or guidelines issued by the council in relation to articled assistants, and or audit assistants, including attendance register work, stipend, and such other related reports. Now, this is another area which is important in relation to the articled assistants, audit assistants, and that's why this is again something that will be reviewed by the peer reviewers. Okay, clear on this? Now let's try to understand what do we mean by technical, professional, and ethical standards. By technical, professional, and ethical standards, we would mean, first of all, accounting standards. Now, those accounting standards could be either related to the previous accounting standards, that means the Indian GAAP, or those could be related to the Ind AS, depending on whatever standard is applicable on this entity. Yeah, so this is one. Second is about the guidance notes, any of the guidances or the advisories which are issued by ICAI, any of the auditing standards, those will again form part of technical, professional, and ethical standards. And all of these are important to be considered and applied by the practice unit in terms of various tasks that they will be doing during the course of their audit engagement. Okay. Now comes the most important point, and that is about applicability. Now, this is very important to understand applicability of peer review. So let's understand how does this peer review become applicable. Okay, first, in terms of their applicability, in relation to the peer review, we can start with level 1. Okay, level 1. Level 1 means the level 1 entities or the level 1 practice units. So you can all move on to page number 17.7. Every practice unit, including its branches, based on their category as determined below, will be subject to peer review. Means every practice unit, every practicing firm will become subject to peer review if it is getting covered under any of these. Let's understand what are those. Number one, and this is also called as level 1 practice unit. A practice unit which has undertaken any of the under mentioned assurance services in the period under review shall be treated as level 1 entity. What are those assurance services which, if undertaken, will make the practice unit as level 1 practice unit for the purposes of peer review? First, central statutory audit of public sector banks, private sector banks, foreign banks, cooperative banks, public financial institutions. Central statutory audit means it's not the audit of branch, it's the audit of the corporate office. It's the audit of the head office. Means at the corporate level, audits should have been conducted. Number two, central statutory audit of central or state public sector undertaking and central cooperative societies based on the criteria such as turnover or paid up capital, which may be decided by the peer review board. Central statutory audit of insurance companies, statutory audit of asset management companies or mutual funds, statutory audit of enterprises whose equity or debt securities are listed in India or outside India. So that means about the statutory audit of listed companies. Statutory audit of any body corporate, including trusts, which are covered under public interest entities. Statutory audit of any body corporate, including trusts, which are covered under public interest entities. Statutory audit of entities which have raised funds from public or banks or institutions of rupees 50 crore during the period under review. So that means if the borrowings of an entity, so let's suppose this is let's suppose there is a client, say SS Limited. It has taken a loan of 51 crore. Let's suppose it has taken a loan of 51 crore. Now, if this audit is conducted, then the firm which is conducting the audit of this company will become level 1 practice unit. Okay. Similarly, statutory audit of entities which have raised donations, contributions over rupees 50 crore. Statutory audit of entities having net worth more than 250 crores. Statutory audit of entities which have been funded by central or state government of rupees 50 crores during the period under review. Statutory audit of NBFCs as may be defined by the board. Central statutory audit of regional rural banks. Statutory audit of parent, subsidiary, associate, JV of above entities. So now all these entities that we have discussed, they have certain criteria on the basis of which auditing, on the basis of which the entity which is auditing them will become level 1. Now we are saying if there is any parent, if there is any subsidiary, associate or JV of any of these entities, then the statutory auditor of those entities will also become level 1 practicing unit. Clear? Number two is about level 2 practice unit. A practice unit which has undertaken following assurance engagements. Now, statutory audit, internal audit, concurrent audit, systems audit, tax audit, and or departmental review of branches or offices of public sector undertakings, public sector or private sector and or foreign banks, insurance companies, cooperative banks, regional rural banks. So all of them will fall under level 2. Statutory audit of NBFCs which are not covered under level 1 and which have been defined by peer review board to be covered under level 2. Statutory audit of entities having net worth of over rupees 5 crore or an annual turnover of more than 50 crore during the period under review. Okay. UDIN generated by the practice unit more than specified number determined by the board from time to time. So if the UDIN has been generated beyond a specified threshold, then those practice units will also fall under level 2. Statutory audit of entities which have raised funds from public or banks or financial institutions of more than 25 crores. So more than 50 crore was level 1, more than 25 but less than 50 or up to 50 is what? Level 2. Any other practice unit providing assurance or other services which were not covered under any of these above, they will also fall under level 2. Okay. So we can say the peer review is required to be conducted depending on the level or depending on the criteria which is followed for practice units. And for this criteria, we first of all need to identify which practice unit will fall under level 1, which practice unit will fall under level 2. Okay. Then there may be a special case review. Let's understand that. The board, based on specific information received from Secretary ICAI or any other committee of the institute, including disciplinary directorate or any other regulator, which in the opinion of the board requires a special review of the practice unit, may conduct a special review of the practice unit. So third is a special review, for which the board will not get into this level 1 or level 2 criteria. That will be independent of this. Fourth, any practice unit which is not selected for peer review, let's suppose that is neither in level 1 nor in level 2, may suo motu apply to the board for conduct of its peer review. The board shall act upon the same within 30 days from the date of receipt of such a request. So fourth, we can say suo motu. So firm wants its peer review to be conducted. So a firm may reach out to the peer review board and request for its peer review. Okay. Now let's understand what is the periodicity of this peer review. Yeah. What is the periodicity of this peer review? Level 1 practice units. Level 2 practice units. For level 1 practice units, the peer review will be conducted once in every 3 years. Okay. For level 2, it will be conducted once in 4 years. And for this, no specified time period. Correct, because it's a special one. And for this, again, we don't have any specified time period because this is suo motu. Correct? Clear? Clear on these? Clear on the criteria of the selection of a practice unit for its peer review? Sumit is asking, that peer review is mandatory for every firm? No, as we have discussed, it's not mandatory for every firm. It's mandatory for those firms who are carrying out certain assurance services which have been specified by the peer review board, which we have discussed. So you can just simply say the firms which are falling under level 1, 2, or under any of these. For them, it is mandatory. So in fact, for these two, it is mandatory. This is a special case and this is suo motu. Suo motu is not mandatory. Clear? Okay, so now let's move on to understand about this peer review process in more detail. We'll now get into the understanding about the reviewer, about various objectives which are required to be fulfilled. We will also get into this peer review process in more detail as to how this entire peer review process has to be conducted. Yeah. But before this, let's quickly have an understanding about the peer review board, because that's the authority, that's the board which has been getting all of these things done. Yeah. So let's understand about this board first of all. Peer review board. As we understand that the peer review board shall be constituted by the council. So it's already constituted by the council of the ICAI. The board shall consist of maximum of 12 members to be appointed by the council, of whom not less than 50% shall be from amongst the members of the council. So that means out of 12, 50% will be the members of the council. The council may nominate members to the board from outside bodies and from amongst prominent individuals of high integrity and reputation, including but not limited to regulatory authorities, bankers, academicians, economists, legal professionals, business executives. The council shall appoint chairman and the vice chairman from amongst its elected council members appointed on the board. Okay, so there will be one, the chairman, second will be the vice chairman, and they will also be from the council only. The term of 2/3 members shall be for 3 years, or the end of the term of the member in the council, whichever is earlier, or such other period as may be prescribed by the council from time to time. The chairman and vice chairman of the board may be rotated every year by the council. Casual vacancies on the board shall be filled by the council. So any member of the disciplinary committee or the disciplinary board of the institute of IC of the excuse me, a member of the disciplinary committee or the disciplinary board of the ICAI shall not be the member of the board. So it's a restriction which is put on the members as regards their appointment, or as regards they becoming the member of the peer review board. Now let's understand the requirement related to the meetings of these members of the peer review board. No business shall be transacted at any meeting of the peer review board unless there are present at least 1/3 members of the board, but not less than 3 members, including the chairman, or in his absence, the vice chairman. So that means at least the chairman or the vice chairman should be present and 3 members should be there. Yeah, so it's like a quorum, which you see in case of company. In the absence of quorum, within half an hour of the time fixed for the meeting shall stand adjourned to a day, time, place fixed by the chairman, or in his absence, the vice chairman. The board shall meet as and when required for the transaction of the business before it. However, at least one meeting shall be held in every 3 months. Okay, so every 3 months. So that means every quarter one meeting has to take place. This board, that means the peer review board, shall submit a report to the council prior to the date of every meeting of the council. So the report of this peer review board should go to the council of the ICAI. And when is this report required to go out? Before every meeting of the council. Okay, clear? So these were some of the requirements related to the peer review board. Now, I think as a next step, what we need to do is we need to move on to the requirements related to the reviewer, as to who can become a reviewer, what is their eligibility, and what all things they are required to do, and then further on to the details of the peer review process. Okay, and we are now coming towards the end of this session. So what we can do is we can just park all of these points to the next session. Yeah, all right. So before we end our discussion, any questions, any doubts? In case you have, you may let me know. Okay, so then we can just conclude our discussion for today. In the next session, we'll just continue with this peer review part, and we'll also get into the quality review. Thanks to all of you once again for your time and for your wonderful participation. Thanks so much.